Hey there, folks. This is Patrick Zielbauer from Infinity Futures. It's Monday morning. Thanks for taking a look at the YouTube channel here. Haven't done a video on this value area system that we've been tracking for some time, but I did want to put one together here because Friday was just a particularly good day for something like this. Now, keep in mind, these are simulated trades, so this is hypothetical performance. Obviously, that has significant limitations. Please, feel free to discuss it with me or your rep in our office. But I did want to touch on what basically happened. So on Friday morning, we had non-farm payroll come out. Remember at 7:30 Central, right? So the market starts to break right around here, which is right around the number. And normally, I wouldn't encourage people to trade directly through a number like this. But again, this is only a simulator, so it doesn't have the same risks. And now we have the benefit of hindsight. But this system basically is looking for anomalous moves, right? The market breaks through the value area low, which has been well established because it's been trading for almost 12 hours, and the CCI hits that lower level below negative 200. This long signal triggers. This is on the S&P at 2429.50. Notice that there's almost no heat taken on this trade. The low of the day, it looks like, was 2427. So, this one, you're really not in much trouble for very often, for very long at all. Over here on the Nasdaq signal came at 58, around 58.27 and 3/4. That was a long. That also took almost no heat. And as you can see, as it does a lot with these reversion to the mean style trades, the market just hangs out lower for a brief period of time, and then it rallied. And it didn't stop the entire day. I remember I took the S&P off a little earlier. You can see that that's an 8.5 point winner. Again, that's hypothetical, but you can see that's 8.5 point winner. That one came off around noon. And then the reason I took that off is because I just wanted to close one and focus on the other. And the NASDAQ has been the outlier in the indexes recently, as you know, a little bit more volatile, bigger ranges. So that one I decided to leave on, and I just left it on until the close. And I closed it, right around 3 o'clock Central, and it's a 50-point winner in the NQ on a one lot. That's not bad. So, you know, this type of strategy, I've talked to a lot of people about it over the last few weeks. It's not for everybody because reversion to the mean style strategies in the wrong hands can be dangerous. You have to be able to uh, have an uncle point, and you also have to be willing to make nothing. If you're using a super tight trailing stop on a system like this, you're never going to catch one of these runners. And for this to work, you have to be able to catch one of these every now and then to make up for the hits you're going to take from time to time. I started a new trade activity log here recently because I've been tracking some other things too, not just the E-minis. You see there's some energies in here and some other things, but a $1,400 winner on two contracts is not common for anybody who's trading any market, but you need that every now and then to offset the losses you're going to have because every now and then you're going to get around on the wrong side of one of these and it's going to run against you. And if you have a lapse in judgment or just having a bad day or whatever, you might not take it off and you could get hurt. So, this particular way of looking at the market is good in a choppy market. It's usually not as good in a trending market because it's not often you get on the right side of one of these. In this case, we happen to get on the right side of it from the beginning. So if you feel like you're sitting in a choppy market and you're looking for a trend following system, you're probably not going to have much luck. You're probably going to want something that works pretty well in a choppy market. And this, when the market is bouncing around up and down, this tends to work a little bit better and you might get more trades. But when I was looking at this, obviously we have a long bias because the market is making new highs, and it didn't scare me as much to put these positions on, even though it's a simulator through the number, because I was maintaining a long bias, and I'd rather have been long in a day like that than short, given what's happening with the stock market. So I thought it was particularly interesting, kind of a fun thing to watch throughout the day. Feel free to contact me if you'd like a copy of the file. If you want me to go through and explain further, the logic, I can do that. But this is something that I think a lot of people could benefit from. In general, it uses a combination of the most important, in my eyes, aspects of a volume profile, which are the value area high and low, and then a regular oscillator like the CCI. It really could be any oscillator, making a level that it doesn't usually sustain for very long, like plus 200 or negative 200. It's not quite this simple. There are other factors. I think you need to keep an eye on crude oil. especially when it starts to break like it has been the last couple of days. And I think you need to keep an eye on if you get this signal on all three markets at the same time, that might actually be a reverse signal. So, for example, if the market starts to break lower and the value area low is breached on all three of these at the same time, and the CCI negative 200 is breached on all three of these at the same time, you could argue that that is, that could be a short instead of, going long, because now all three of these are powering lower instead of one or two of them, kind of mishmashing around. So very, very contextual. I don't think trading is self-directed trading is anything but that. It's all about context. All the indicators in the world, are worth the paper they're written on, which in this day and age is nothing. Okay, so you really have to know how to use them, and you got to have your head screwed on nice and tight, especially if you're going to be trading in a market that doesn't announce when the volatility is going to strike, like the one we have now. All right. If you have any questions, please let us know. Thanks for listening.